Welcome back to Yahoo Finance Live. We're just a few minutes away from that opening bell on Wall Street, but let's turn our attention to shares of Match. You're seeing it really here hammered in the pre-market, and rightfully so after the company this quarter, the company put out after the close yesterday, looking at 19% year-over-year core sales growth, or sales growth excluding volatile currency. That was a slowdown or a deceleration from 24% growth in the first quarter. You saw Tinder sales growth slow again, I believe, for the third straight quarter. And now the new CEO, Bernard Kim, he's not wasting any time shaking up this team, giving the boot to the CEO of Tinder.
But it comes back to the operating loss here, too, that the company saw in this most recent quarter. I mean, 12% revenue grew year over year. $795 million is where they saw that growth. But they saw a $10 million still operating loss come in for the quarter with a $217 million impairment that you're also mentioning here. So all of these things considered, even at a time where you're seeing growth across some of their most core businesses, they're still having to report this loss, citing the impairment as well. But I think more broadly here, it does come back to how they're going to continue to see people get onto the platform, look for love, and the paying people who are looking for love.
What happened to the COVID dating boom? I thought these companies, Bumble, Match, I thought they were going to be hot.
The company seems confused. I mean, so to your point, paying users up about 10% to 16.4 million. That's how many people were on there across their various apps. And there does seem to be a little confusion here. And Bernard Kim, the CEO, talked about that. He said, we thought people would be getting back out there and looking for love. And it's not happening in the same numbers that they would have expected. So I don't know. We need
Is love in a recession? Love might be in a recession.
Wow.
Pulling
There's
back.
never a recession in love, Brad Sozzi.
We need
how much you're spending on a date might be.
None of us are in the market. None of us are on these apps. But I am curious, for those of you who are out there and using these things, tweet at us.
Send us some love on Twitter.
Are people still using them? Are they just doing it the old-fashioned way, where you just meet somebody at the bar?
No, nobody's doing that. No.
Yes, there are people.
You can't afford those drinks. $20 for a drink. I mean, that's expensive for a date night.
I don't know what you're drinking. Bud Light. Come on, you drink some Bud Light.
Nobody's going to Bud Light. You see Budweiser quarter earlier?
I don't drink Bud Light. So.
It raises the larger question, though, of whether you do see attrition if people pull back on some of their spending on an in-app service like this as well, to say, you know what, I'll just go about this the old-fashioned way.
Great, here come the tweets. I'm ready. Here we go.
Yeah?
I'm just minding my feet. I'm ready to go.
I definitely want some. One interesting thing is we talk a lot about Tinder. Hinge apparently is... They're predicting it's going to do a little bit better, right? That it's going to contribute $300 million in revenue this year, which is a 50% increase from last year. And they're looking at international growth also. They're emphasizing growth in Asia Pacific. They're emphasizing growth in Europe. Brian Sozzi is still laughing.
I was looking at the Tinder chart, and I'm thinking that's part of the reason why we didn't get such a great quarter from Anheuser-Busch and even Molson Coors. Less people out there dating, getting their drink on. That's what we're doing. We're tying it all together.
Is that what's
happening?
happening?
Hit those tickers,
Not
yes.
a change in taste.
That's news you can use right there. News you can use.